What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol AUR for Aurora Innovation. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this is a not brand new, but fairly new SPAC merger. This is, of course, for a robo-driving service. And in the post-market, I should let you know that there has been some momentum continuation. If we zoom in here, what you'll notice, this bull flag from the 30-minute perspective here has unfolded, panned out to the upside. Again, in the post-market session. So it's very likely that we will open on some sort of gap up for tomorrow's session. And in this instance, we always want to know where is the overnight high, where's the forecasted opening print, we'll call it here, and where is today's high of day for the gap fill framework, which we're always discussing. So let's take a look through the lens of the daily. I think it's easiest to look at here. If we do something like this, we got to scrunch the chart up quite a bit. What you'll notice is that these two ranges, so this here and this here, are fairly similar in size. Now, this generally makes the trade more difficult to pull off when we're talking about gap and trap. And this is always the number one scenario that you have to think about when we're gapping up out of range. Could be based on earnings, could be based on a news catalyst, doesn't matter. Whenever you're dealing with a gap, you generally think about the gap and trap. And what the gap and trap would be opening here, failing to take out the overnight high, trading back lower through the open, triggers a short to fill the gap down to today's high of day at 1183. Now, are you actually going to short this thing? Let's come on over to the trade tab. Obviously, there are no shares to short here, and the put contracts volume is absolutely pathetic, so you're not actually going to short this. Also, look at the spreads in here. This is not something that I would ever recommend anyone gets involved in, right? So coming back over to the chart, all this would mean simply is that if this scenario pans out here, then you just want to avoid looking at long-sided trades until we either put in a structural bottom or come all the way into the gap fill area, and then you can reassess the chart. So please be cautious on the gap up, right? That's simply all we're saying here. In terms of the gap and go, I'm sure this is the scenario a lot more people want to hear about. This is always scenario number 2 on the back burner of the gap and trap. And what this one looks like would be opening here, no acceptance back down underneath the opening print. Instead, a bull flag could be put in underneath the overnight high. Could look something like an ascending triangle, right? So something like this, higher lows, flat highs. If we break out up and over that overnight high, just know that we have blue sky territories ahead. Really no targets are here. So I would pay attention very closely to whole dollars, 25-cent marks, and 50-cent marks here on a stock that's still trading sub $20. Those are my thoughts to the upside, quite simply put. If it's going to unfold that way, volume needs to be heavy. It's got to be a pure momentum continuation play. Therefore, we need to see a lot of supply and demand issues, aka volume, flooding into the stock. Now, from the 30-minute perspective, what does that look like? Well, if we just take out this and use this as a general baseline, it's got to be north of like 500,000 shares, 500,000 shares per 30-minute bar. And I think it can easily do that if this is going to attract a lot of new eyeballs, this big gap up likely for tomorrow's session. Okay, so keep an eye on volume. That'll be your driver, and that'll be your added piece of confidence to know if this bull flag gets put in that we could see momentum continuation. If volume is not there, if volume is less than 500,000 per 30-minute bar, then I would look more likely for the gap fade scenario, the gap and trap, to take us back down into the prior day's high. Those are my thoughts here inside of Aurora. Hopefully this framework was useful and it keeps you out of trouble tomorrow morning. If you learned something new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.